All right, let's talk about Murphy Oil, ticker MUR. We're going to dig into their latest earnings call for Q4 2025.
So here's the big question, right? On paper, Murphy posts this huge earnings beat, but then the stock just tanks. What's going on? What did the market see that maybe wasn't so obvious in the headlines? That's exactly the puzzle we're going to solve today.
The answer, as it often is buried in the details. This is what we in the biz call a mixed quality beat. It's like, yeah, the headline looks great, but there are some pretty big buts attached.
And here's where that conflict really comes into focus. Look, on one side, you've got adjusted earnings of 14 cents a share. The street was expecting a 2-cent loss. So, that's a massive beat, right? But, and it's a big but, flip over to the other side, revenue. They brought in $613 million, which missed what analysts were looking for by over $28 million. That top-line miss, that was the first major red flag for investors. And boy, did the market react. You can see exactly how traders felt about that miss. The stock dropped almost 3% of the pre-market right as the news broke. It just couldn't bounce back, ending the day down over 1%. And look at that volume, way higher than usual. The market basically cast its vote, and it was loud and clear. We care more about the revenue miss and the future than we do about that backward-looking earnings number. So that's why the past quarter doesn't tell the whole story. What really matters here is the future. Let's get into management's guidance, because that's where the real long-term narrative is. Yeah, and you gotta hand it to him. Management was pretty upfront on the call. The CEO used this exact phrase to describe what's coming. Now, whenever you hear a CEO talk about investing for future growth, that's Wall Street code for a transitional year. And what does that mean? It means, hey, brace for some pain right now because we're hoping for a big payoff down the road. And we're not talking about a small investment here. They're guiding to a full-year capital spend of somewhere between $1.2 and $1.3 billion. That is some serious cash they're planning to put to work. Okay, but here it is. This is the other shoe dropping. This is what really had the market worried. All that spending is going up, but production is actually going down. Their target for 2026 is about 171,000 barrels of oil equivalent per day. And you can see right there, that's a pretty big drop from the 182,000 they were doing in 2025. Think about that combo, spending more to produce less. That is a really tough pill for the market to swallow, at least in the short run. So you're probably asking, where is all that billion-plus dollars going? Well, the analyst Q&A session gave us all the clues we needed. The whole conversation was laser-focused on the future. Everyone wanted to know about the timing for their big projects in the Gulf of Mexico, about how flexible their spending plans are, but the real star of the show? This massive new discovery they have in Vietnam. And get this, management made a pretty huge claim. They said they expect this Vietnam project to eventually be bigger than their entire Eagle Ford business by the early 2030s. That's a game changer. But you heard me say early 2030s, right? Long-term is definitely the key phrase here. This is not happening tomorrow. Just look at this timeline. They're still just in the appraisal phase this year. They probably won't even make a final decision to go ahead until 2027. And the first oil from this big project, we're talking somewhere around 2031. So yeah, it's a huge potential prize, but man, it is a long, long way off. Okay, so let's pull all these threads together. Here's our take on Murphy Oil moving forward. We're calling this a market perform. And what that really means is that Murphy is in what we call a show-me story. The market has heard the big long-term plan. They've heard the promises. Now it's time to sit back and wait for them to prove they can actually do it. It's all about execution from here on out. So what are the key things to watch for? I'd boil it down to 3. First, can they actually hit their production numbers for this year? No excuses, no slip-ups. Second, we need to see updates on those huge offshore projects, especially Vietnam. Anything that makes that timeline feel more real is a huge plus. And third, of course, there's the wild card, the price of oil. That can just change the entire story for any energy company overnight. All right, finally, let's talk about a potential trade idea based on all this. And just a quick reminder, of course, this is purely for informational purposes. So the core idea here is pretty simple. The market seems to be punishing Murphy for this investment year in 2026. And that might be creating an opportunity if you're willing to take a longer-term view. The whole argument is that this massive, multi-billion-dollar potential in Vietnam is getting seriously undervalued right now. So one way you could play that is with long-dated call options, something that expires way out, say late 2027, maybe even 2028. The whole point of that strategy is to skip over all the short-term noise and really position yourself for a potential pop if and when that Vietnam project gets closer to reality and the market starts to reprice the stock.
So I guess that's the billion-dollar question, isn't it? Can this management team execute well enough to bridge this gap between the money they're spending today and a massive payoff that's still years and years down the road? And of course, remember, this is not financial advice.